Welcome, everybody. This is going to be the watch list for Monday, January 8th. And what I'd like to start with is looking at the two major indexes. First, we're going to start with the S&P 500, which is the SPY. And as you can see here, we've had a little bit of a sell-off over the past week going into the new year. So if this weakness continues and persists, what would be a couple of key levels that I would keep an eye on? Well, first and foremost, I would be watching this prior pivot here where we came up, hit a high, and then we started to trend downward until we found support back here in October of last year. But more importantly, another way for us to look at this is I would pay attention to a fib level, which is a retracement of at least 50% of the market from the last pivot consolidation to the high. So right now we're trading at 467.92. If we continue to trend down, I would watch 465.93, 463, 459. If you're going to look to put on a trade, depending upon is the market strong or weak, I would look to buy puts down to that 466 level first, and then down to the 463. But with that being said, I think it'll be interesting to watch how the banks start kicking off earnings season this next coming Friday. So we will most likely have some more market chop, a little bit of sideways action in both directions. But do note that this last pivot high to the breakdown pretty much aligns with the 786 fib retracement. So if the market has weakness, here's your targets: 465.93, 463.19, 459.28. And then I would watch them intraday. Now, if we break this 459.28, we have a large gap here from a market perspective. And I'm going to do a gap fill, which would be all the way down here at 446. Now, that's quite a drop from where we're at today. But as you know, once we break this 786 fib level, this is going to act as a magnet for the market to draw itself to. So if we are going to be bearish, these are your price levels going down. Now, let's take a look at the TRIPLEQs. TRIPLEQs has been a little bit weaker than the overall SPY, predominantly because Apple has had two downgrades within the past week, which is pretty much unprecedented. So what would I watch for the overall TRIPLEQs? Well, the exact same thing. Where was a prior pivot point before the market broke down, which is at 387.98. You can see around this area, we had a lot of consolidation before we broke lower, used it as support, and moved up. If I were also going to go in and take a fib level from the low to the high, you'll note that we already missed the 50% fib. We did not bounce, which is what we would want to see if there was going to be bullish activity. This candle here is also showing indecisiveness, but also weakness. So I would target another down target of 394.22. And if we break the 394.22, we're probably going down to the 389 level. Now, mind you, right below that 389 is this prior pivot high of 387. If we break that, again, what we're going to want to do is we're going to want to watch for, is there a gap fill? Well, there is. The next gap fill is right here between 383 and 378. So if we break the prior pivot high, we are going to use this as a magnet to continue to come down. Let's take a look at some of the individual stocks. So I do want to look at a couple of them. First and foremost, I want to look at Apple. I had a prior trend line here. My watch list this week, back in November, said if we break above the trend line, go long Apple, which would have been a great trade. Now, mind you, what's happened since then? Well, let's look at the fib level from the total pivot low to the pivot high, and we've already missed the 50% bounce level of 182. This was trading all the way up here at 199, so we've already had a pretty good drop of about 6%. I think that we are most likely going to keep dropping further as there's been more and more pressure in the news around Apple. First and foremost, there's a lot of antitrust between Microsoft and Apple, because Microsoft is the default browser for all Apple iPhones, and that is creating some regulation concern around the world. And then two, not that watches are a big piece of Apple's overall revenue and profitability, but it's their wearables, and they just pulled their most recent watch off the market because of some lawsuit patents. So the question will become is, can the market go higher with Apple dropping, knowing that Apple represents about 7% of the overall TRIPLEQs and SPY? So the lowest price target I would think would be a really good buy for Apple would be this 165.67. I would watch for a bounce at the 178.64 to see, do we go higher? If we go higher, then again, we have a pretty significant gap fill up here above. But the market would have to do a 180 from where it's at on an overall sentiment perspective. So let's think about, why did the market tear from this market low in October all the way to where we were at as of December? A lot of it had to do with the fact that the market believed that the Fed was done raising rates, and then somehow the market got into its mind over the last FOMC meeting that the Fed was going to cut rates 6 times, which would be astounding considering they just raised rates almost 12 times, and the economy is very strong. Unemployment is exceptionally low. I cannot foresee that the Fed would start cutting rates in another 60 days based upon how strong things are. And therefore, I think they got a little bit of ahead themselves, and therefore the market is now starting to sell off, realizing that, oh, well, maybe the Fed isn't going to be giving out free money like we thought they were going to. So one of the other ones I would take a watch at is Tesla. I did call this on my watch list last week and said I would go short. Definitely, if you took that trade, wow, what a winner that was. I mean, we moved from 265 all the way down to 236, which is a huge drop in premiums. Now, the one thing to watch with Tesla is that there has been a lot of consolidation within the overall market. So I want to go ahead and show you where we are going to have some strong demand, which is going to be right here around this 230 level, okay? Now, if we break 230, I definitely think that there's more room to the downside with some price targets ultimately of 205 and then down to 194, 195. But do note that these are daily candles. There's been a ton of consolidation here. So if we break this, all these people who were buying and went long are figuring out that, well, we're probably not going to hold the 225 range. Then we are heading lower, and my next stop would be the 205 area and then possibly the 195. And then lastly, as I said before, do keep an eye on banks. I talked about JP Morgan last week, showing you that it literally hit an all-time high. This would have been a prior pivot where it could have broken lower. You'll note that on 2 days, we pushed up to new highs, but we couldn't hold. And the question will become is, do we start to move back down? And if we do, what would I look at? I would look at this consolidation zone right here in the red for a play between 168 to 162, which I think would be a really, really healthy pullback. And then if we're going to pull back from there, the prior pivot in this stock was right around 158. So not too much lower. Do I think we're going to break all the way back down to the 150s? We would have to have some pretty negative sentiment for that to happen. So banks announced starting next Friday. Keep an eye on that. It will likely be the catalyst to what drives the market higher or lower based upon loan loss reserves, deposit costs, overall spreads. Are they expanding? Are they contracting? And what is the overall commentary on the health of the consumer? So listen to Brian Moynihan at Bank of America. Listen to Jamie Dimon at JP Morgan Chase. I don't know so much about Citi. Citi has been on a tear. Jane Frazier's going through a total revamp, huge consolidation, 20,000 layoffs. So that's a whole nother ball of wax. But watch the money center banks, and depending upon how the money center banks, usually the regional banks will follow suit with actually more volatility. So with that, I hope that this was very helpful for you in just kind of how to think about the markets, different price levels to watch. Are you going to go long with calls, short with puts? Right now, I'm more bearish. I would be in the put camp versus the call camp, but that's just me. So if you have any questions or need any help, always feel free to watch out, call, whatever, reach. I'm here to help you. So with that, have a great weekend, everybody, and we'll talk to you soon. Take care.